Advanced Options Trading Strategies. Now, with a title like that, you're probably expecting me to cover things like straddles, strangles, iron condors, butterflies, or heck, maybe even covered put monkey ball spreads. That's my favorite option strategy. But no, I'm going to cover something more advanced than all of that. More advanced than all that, Barry? Absolutely. And what I'm sharing with you here, honestly, is a gift, because this is the thing that turned me from non-profitable into profitable. This was the turning point in my trading career, and I'm going to share it with you. So here we go. And by the way, while I use this with options, you can apply this to stock trading, Forex trading, futures, crypto, any kind of trading whatsoever. So as you can see, we've got a trading log up here. Well, that is, it's not just a trading log. Okay, trading log as far as when you entered, exited, the prices, all that you can get from your broker. But here is the key. Actually, let's go up here first, because this is really the theme. So the theme of this is successful trading is simply a business of not making mistakes. So what is a mistake in trading? A mistake is defined as anything wherein you break your rules. So when you break a trading rule, that's how we define a mistake. Now, where do we get our trading rules from? So let's take this back one more step before that. Our trading rules come from a statistical model. So a trading system is based on a statistical model because none of us know the future. None of us can predict what the market's going to do. So we create these statistical models. We build the rules around them, which when we follow the rules, it keeps us within that statistical model probability. Think of the bell curve for probability. And a rule is anything that would break one of those rules and therefore take you out of the statistical probability of making money. So when you break one of those rules, that's what I call a mistake. And that takes you out of the probability scenario over a large sample of data, which is what we're trading. So in this, what we're doing here, big trading log, all this stuff, again, you can get that from your broker. So the thing we're going to focus on today is this yellow box right here, mistakes. So with each trade that you take, and by the way, so this represents one trade here. So within each trade we take, we write down what mistakes we made after the trade is taken, if any. Okay, if you didn't make any mistakes, well, cool. You don't put anything in there. Now, if you did make any mistakes, then what would mistakes be? It could be over trading. It could be taking your profits too soon. It could be things like, you fudged on the rules a little bit because you thought it was good. It felt like it was good. You're trusting your gut instinct. Or maybe you heard something on financial news and some, famous person there said something like, I think I'm going to trade that, even though it had nothing to do with your trading rules or your statistical model. Or maybe you just were getting frustrated that not enough good trades were coming along, and so you got frustrated, got impatient, and you're like, it's close enough to my rules, I'll take it anyway. So these are the kind of things. Now, the rules that we break are different for each one of us. So this is a gift you have to give yourself in doing this exercise, because you'll find, so that's what you do. You type the rules or the mistakes in here. Okay, it might be more than one on a trade. And now here's what we do after that. So after that, we're going to transfer them over to a weekly log. And on the weekly log, so each one of these rows represents one day. So perhaps you took 5 trades that day, however many trades the next day, however many trades the next day. So that'd be a day 2, day 3, day 4, day 5. So 5 days in a week. Okay, so you get that. So for each day, however many trades you took, you're going to put the mistakes in here. So let's say you took 5 trades that day and 3 times you get out too early. And so you didn't make the maximum reward, and therefore you messed up your risk-reward ratio. All right, so if you did it 5 times that day, then you just write in, you can type or write and say, okay, got out too early, and put the number 5 next to it. And then maybe took an emotional trade. Okay, maybe you did that twice that day, so you put a number 2 to it. You don't write it each time. And then the next day, same thing. Okay, whatever mistakes you made that day, this day. All right, then at the end of the week, so now you notice 1, 2, 3, 4, 5 days in a week. So then we go down to this final row. And in here, we're going to add them all up. So for each day, we add them all up. So at the end of the week, maybe I took 5 emotional trades. And maybe I got out of 20 trades too early. All right, whatever the numbers might be. Point is, you're looking for patterns, your patterns. So, we trade chart patterns, price patterns on charts. Well, there's also patterns to your own mind, your own trading psychology that will be unique to you. Again, some people, they get out too early and they find themselves doing that over and over and over and over and over. Other people, they don't do that mistake. They don't have that. Maybe for them, they just take emotional trades and they find themselves doing that over and over and over. So none of us are ever a perfect trader. You never become a perfect trader. So recognizing that, what we're going to do is we're just going to focus on the mistakes you make the most and reduce that one as dramatically as possible. Focus on one thing at a time. First of all, this will bring it to your attention because you will see it on paper. Think of this paper as almost like a mirror. It's not paper. It's a mirror reflecting back to you your trading psychology. And it'll bring it up to your consciousness because most of us have kind of an underlying awareness that, oh, maybe I'm getting out of trades too soon, but you don't know how much it's really affecting you, how many times you do it, you tend to underestimate it, and how much money it's costing you. And by the way, that's another thing with this. Real quick, I'll just show you because this is the magic that worked for me. So here, this column. Okay, so first of all, I had my net profit and loss in my account. That's how much I actually made or lost. But then I had this column, and this was my net profit and loss if I hadn't have done any of these mistakes. And what I found out was, oh, wow, okay, I was negative over here. I was losing money. But if I wouldn't have made any of the mistakes, when I removed those trades, I was already a profitable trader already without needing anything else. Wow. That was the turning point for me, my friends, right there. Right there. That's what made the difference. Now, I have one extra piece of secret sauce here. So the way I've taught you so far is we're doing this after we've taken the trade, and that's how you've got to start doing it. Once you start doing that for a while, you start recognizing your mistakes. Now, we're going to do that ahead of time. Ooh, and this is where it really gets good. So now, when you're looking at a trade, before you take a trade, you ask yourself this question. If this trade doesn't work out, what mistake or mistakes will I be writing into that box? And that's before you execute the trade. If you can think of anything, any mistake you'd put in that column or in that box, do not take the trade. You should not be making mistakes. So now think of it ahead of time instead of afterwards. And wow, that even took my trading to the next level. Also, I have my cycle indicator, my market timing indicator, a whole recorded presentation about that where I show you how to set it up on your charts and how to trade it. So go get that at indicatorwebinar.com. And then finally, subscribe. Subscribe to the YouTube channel because I'm doing more videos now. And if you subscribe, you'll get notified every time I come out with a new video. So you'll never lose out at any of these sweet tutorials.